Today, we're talking about pensions.
I do.
Yes.
Yes.
No.
Yes.
I do, yeah.
Vaguely.
No.
At my work, I could get a pension if I wanted to, but I wouldn't know where that money was being stored.
No.
Not directly, it's impossible to know.
Mostly, yes.
If you have a full-time job, money is taken out of your paycheck every month and put into a pension. For lots of people, that's basically where the story ends. I mean, try and remember the last time you actually thought about your pension. What you might not know is that there's a strong chance that your money is contributing to the climate crisis. Pension funds are some of the world's largest investors, holding trillions in assets, and they've put billions into fossil fuel companies like Shell, Total and BP over the decades so that you can retire with money in the bank. At a time when more people than ever believe that climate change demands more urgent action, that leads us to two questions. Why are pension funds such big investors into fossil fuel companies? And do you have any control over how your money is invested? Before we can answer these questions, we have to rewind a bit. Actually, we have to rewind a lot. In 1889, a German chancellor called Otto von Bismarck introduced a system of modern government pensions. The idea of providing financial security for the elderly gradually caught on and grew bigger in Europe, the United States and other growing economies. The retirement plan he offered was the first to be widely available, but it was hardly the first one ever. Roman legionnaires who'd served for 20 years would receive a form of pension from the Emperor Augustus. And in the 16th century, Britain and other European countries would offer pensions to their troops. Pensions have changed a bit since Bismarck's time, but the core concept is the same.
I have some good news for those who are often overlooked by governments.
Nowadays, employees add money from each paycheck into a fund that includes contributions by their employer. This is then invested by the pension fund to generate a return. The savings add up over the years to produce a pot of money that the employee can use when they retire. Pension funds can sometimes have enormous amounts of money to invest, tens or hundreds of billions of dollars, and are major players in the stock markets.
I think this is about telling a kind of simple story that pensions are invested. They create the world around us. Kind of tea or coffee you drink in the morning, that company your pension's probably invested in. The card you use to get on the tube or the train or the bus, that card, that bank, your pensions will be invested in. Your whole, day-to-day life, your pension is invested in those companies.
You might have never even heard of them, but these companies play a really important role in the global financial system. Despite being such major investors, pension funds kind of fly under the radar when it comes to public recognition. Here's an example. Here are the world's 5 biggest tech companies. Chances are that most people on the planet will have heard of them. In total, they're worth about $4.2 trillion. Now, let's look at the top 5 pensions. Worth almost as much as the tech giants. $3.97 trillion, but we won't judge you if you can't name them all. So, why do they decide to invest their money in fossil fuels?
Generally, we consider a good investment something that is stable, sustainable, and will have a good return and risk balance in the long term.
So I suppose in the past, fossil fuel companies, they were quite lucrative to invest in. You could make lots of money from them. And because of that, they kind of made up a big part of the stock market.
Right now, you're probably wondering, if they can invest loads into fossil fuel companies, why not do the same with renewables? Well, it's complicated. Investing in renewables is still considered challenging and risky, and that's for a couple of reasons.
Sometimes investing in a project directly is more illiquid, which means that you can't always take the money out as quickly as you can with a listed company when something does go wrong.
Climate risk is a very kind of systemic risk. And I think pension schemes are very used to kind of risks of inflation and kind of short-term economic risks. Renewables are basically infrastructure. They're big kind of projects. And they're used to kind of investing a tiny bit in lots of companies, whereas investing in renewables is a different type of investment. It's kind of what's normally known as private equity. So they tend to be private companies, they're not publicly traded. And therefore, when you invest in private equity, you tend to invest a much bigger share, so you take on a lot of the risks because you might own 20% of that company.
Then there's the competition. The global energy market has been dominated by the same players for years, making it difficult for others to break in. Renewables need to compete with wealthier industries that benefit from existing infrastructure, expertise and policy. If you were investing $1 billion, would you give it to a company that's been around for 6 months or 6 decades? Of course, there are some options if you want to put your money into more socially responsible companies. Some pension schemes let you divert your money into ethical funds, which avoid tobacco, weapons and gambling stocks.
Divesting is not investing in either a kind of specific company or a sector. So what we hear about the most is the fossil fuel sector.
But only a tiny number of these screen out oil, gas and coal companies.
We think generally that divestment isn't always the best option, and the main reason for that is that you lose the power to hold a company to account. It's more important to work with these companies because they must be a part of the solution to transitioning to a low carbon economy.
And even when they do, it's not necessarily for the environment. Just take a look at Norway's biggest sovereign wealth fund. It announced it was dumping $37 billion worth of oil and gas stocks last year, but this was more to protect its economy than anything else. And in fact, in the end, it only dropped $6 billion. That's because many of the fossil fuel companies it invested in were players in the renewables sector too. But it's not just the businesses themselves who are to blame, we're also part of the problem. With auto-enrolment, lots of us have no idea where our pension money goes.
There's definitely a lack of transparency there, and there needs to be more done to make that transparent.
And even if you can choose where to put it, the options aren't clear. A survey found 47% of people don't know where their workplace pension is being invested, and many just don't have the time to put pressure on companies to change, even if they think they should.
Some pension funds have got different options available to their members. In addition to a default fund, they can also go into something like an ethical option to reflect their own values.
While 85% say they're concerned about the environment, only 22% of us have our money invested in schemes with good environmental and social practices.
So I think we definitely haven't heard the voice of pension savers, which is the majority of the people in the UK. They're all putting their money into a pension every month, and it's kind of fueling a world that they may not be able to live in. We hear kind of rumours that people don't care about this stuff, or they don't ask the right questions, or they might care but they don't actually move their money. I think all that is kind of a distraction from, people do care but they don't necessarily have the kind of tools or the actions to make their voice heard.
And of course, when you're looking at your pension for ethical investing, you still want to make sure you have a decent pot to retire with, so performance matters just as much. Despite investors being sceptical, the core idea of a good investment is slowly shifting towards renewable energies.
It's risky in terms of our planetary health, I suppose. If you're investing in coal and oil and gas companies, you're investing in one of the root causes of the climate crisis. You're, I suppose, putting the other investments in your pension also at risk, because we know that climate impacts will impact all parts of, or many parts of an investment portfolio.
Some reports project that half of all global energy will be produced by renewables by 2037, and that only 28% of our global energy will come from fossil fuel companies by 2050. There's a strong argument that what a conservative, responsible pension investment now looks like is moving away from fossil fuels to renewable energy.
Unless energy demand is reduced significantly, which is unlikely as the population continues to grow and the economy continues to grow, then we need to find an alternative to fossil fuels.
Public opinion is also shifting dramatically.
The awareness is definitely raising. So there was an interesting opinion poll done last September that kind of found that the majority of people thought that financial institutions and banks should be divesting from fossil fuels.
At the 2019 UN Climate Summit, insurers and pension funds managing $2.3 trillion promised to move away from carbon-heavy industries in the hope of triggering climate commitments from other big investors. Many pension funds are leading the fight for more transparency in investments and divesting into ethical businesses and renewable energies.
Climate action can't just be done in one geography. There has to be a global effort, and pension funds are already working together on a global level through different initiatives, engagement, collaborations, but also by exchanging information.
So I think the divestment movement is going to continue to snowball, and I think it will do that because of the the public pressure, you know, for climate action, but also the financial risk that fossil fuels pose to investors.
We've heard from investors for many years that they are in conversations with companies about climate change. There needs to be really a date, quite, you know, in the next couple of years, where you say, well, if these companies aren't changing, if they're still investing that tiny amount in renewables, then we're not going to invest in them anymore. I think if you're just kind of waiting for big oil and gas companies to make this shift without putting a kind of time on it, then you're going to be waiting forever, and then it'll be too late.